A very good morning to all. Yesterday, the surge in the Indian markets surprised many. This was despite the fact that US markets ended the previous day more than 2.5% down, and the European markets were down more than 1%. Yesterday's rise was mainly on account of fresh buying in the frontline blue chip counters. FIIs invested more than 500 crore in the cash market segment yesterday. The rise was mainly accounted for three reasons. Firstly, was the fall in the gold prices in the international markets. After touching a low of $1322, the gold ended the day at $1380 on a positive note. The second factor was the crude oil prices. Brent crude, which was hovering around $120 last week, came below the psychological mark of $100 and closed below it yesterday. The third factor, which was accounting for yesterday's rise, was the fall of gold, which would reduce the burden on the Indian current account deficit, which has surged more than 5.4% of GDP. The IMF yesterday also gave a forecast of India CAD current account deficit falling to 4.9% for the year 2013 and has revised its target of CAD for 2014 to 4.6%. Asian markets are trading on a positive zone this morning. Some of the stocks that could be viewed today include the rise of Reliance Industry, which gave a 32% rise in its net profit yesterday. Its gross refining margin, which is the difference between the value of processed crude and the final petroleum product, rose to $10.1 against the street estimates of $9.9. Important results which are lined up today includes the likes of TCS and HCL Tech. Markets are expected to be sideways for today's session. Thank you very much and happy investing.